Unpopular opinion time from Reserved Investments. Regulation is usually a good thing. Regulation works. Today, I'm going to show you one such example where regulation would have really protected a lot of the Timmies, Kimmies, and Poindexters from getting taken advantage of. Today, we are going to be talking about NFTs. Now, if you're new to my channel, you probably don't know this. I have been on YouTube almost 4 years. This is the Collectibles Finance channel. So please stop sending me emails about the first time you discovered the Nintendo Entertainment System, or the first time your dad or grandfather took you to see a Star Wars movie, or hold my beer here. Now, I'm gluten-free, so really I don't drink beer, but hold my drink. Please do not also tell me about the time that you discovered Batman, Superman, or Spider-Man. Or how about this? The first time you played Sonic the Hedgehog. I really don't care because, again, this is a Collectibles Finance channel. We talk about investing, speculating, and yes, collecting a lot of these items from the perspective of somebody educated in business, economics, and finance. Meaning, I look at all these markets from the looking glass perspective of somebody who wants to make money, whether that be over the short term or over the long term. Now, if that's something that interests you and you're just tuning into my channel for the first time, welcome to Reserved Investments. If you're a Timmy, Kimmy, or Poindexter, or just somebody that just wants to collect this stuff and doesn't want to pay attention to investing in these markets, attempting to make money in these markets, you do you. You are under no obligation to watch this video, like this video, or subscribe to this particular YouTube channel. I just want to make that clear. Now, with all that being said, today we're going to be talking about NFTs. Remember those wonderful, fun JPEG images that people were selling for hundreds of thousands of dollars simply because it was supposed to be the next big thing? Kind of like great at video games, kind of like a lot of these markets that went sideways when the free money from the federal government dried up that I tried to warn you guys about from investing in. Look at what's going on with luxury watches right now. You guys having fun? That market's set to fall another 10 to 20% over the next year or so. These markets are not what a lot of people understand them to be. And that's what I do on this channel. I dig through the hype and I tell you the truth as to how these markets work. I'm going to state this right from the get-go, guys. Investing in almost anything, whether it's stocks, whether it's index funds, which I prefer, whether it's ETFs, whether it's alternate asset classes, even real estate, most investors are bored out of their mind because all is what they do is they park cash and they let it ride over the long term. And if they've done all their homework, they did all the necessary research, the market will reward them at some point. Now, how much the market's going to reward them, we really have no idea. That's why there's an economic concept called opportunity cost. And you have to analyze a lot of these markets from the perspective of what you're giving up. You know, guys, let me just use this as a quick example because a lot of people that watch this channel are completely new to investing. And again, I hold nothing against you. You all have to start somewhere. So if you're somebody, maybe you didn't go to college, maybe you did go to college, maybe you're 18, 19, 20, 21, 22, and you watch this guy named Reserved Investments who comes on your wonderful YouTube screen and you go, why the hell should I listen to this guy? This guy's crazy. Well, you're right. I am crazy, but just hear me out here. Most people do not understand this core investing truth that I'm about to throw at you. 50% of people do not understand this core investing truth that I'm going to explain to you right now. If you have an asset, it doesn't matter if it's a great video game, doesn't matter if it's an NFT, doesn't matter if it's cryptocurrency, doesn't matter if it's an ounce of gold, it doesn't matter if it's a stock, it doesn't matter what it is. It can be anything. And you have that particular asset, and let's say that it's valued right now at $25,000, and that particular asset class drops 50%. So now you paid $25,000 for this asset, and it's now valued at $12,500. You are aware, just looking at the numbers, you just lost 50% of your money. Now, here's something that everybody gets wrong. If that particular asset class that was worth $25,000 that is now selling for $12,500. If you want to get back to $25,000, that asset class that you have now has to go up 100% in value just to get back to the break-even point. This is a basic investing truth. Believe it or not, they've done statistics on this. They've ran the analysis. 50% of all people do not understand that. Where if you would ask them, if you have an asset valued at $100 and you lose 50%, what would the asset be worth? Well, a lot of people will tell you $50, which is correct. Now, if you ask those same people, what percentage of gain does that asset need to go back up to $100, meaning from 50 to 100? You aware? Most people answer 50%. That is completely incorrect. That asset now has to double in value just to get back to where it was. Now, why am I explaining this? Why am I spending so much time on this? Because there's people like me, there's people with MBAs and above that watch this channel, and they're probably getting frustrated with me right now. The reason why I choose to focus on that particular talking point is because you have to understand that when you get involved with speculative markets. Sure, if you know what you're doing, you can make a lot of money in speculative markets. You can sell into the hype, you can get your gains, you can get out, and you can pretty much profit immensely. If you don't know what you're doing, you're going to end up taking a massive haircut. And a lot of your items that you are buying in that particular proverbial speculative market, they're going to drop 50% or more. That's why you got to understand the volatility, the risk-reward analysis in a lot of these markets. Now, with that being said, let's talk about NFTs here. There was an excellent article that was put out by CNN, and it was published on August 17th, 2023. I'm going to put a link to the full article below in the video description. The title of this particular piece is Bored Apes Investors Sue Sotheby's, Paris Hilton, and others as NFT prices collapse. Now, this is something that just boggles my mind. You know, every 5-10 years or so, pretty much we go through massive speculative bubbles. Whether it's in real estate, collectibles, up-and-coming things like NFTs, cryptocurrency, antiques, meme stocks. Pretty much, if you've lived through at least one of these cycles, where a lot of these markets change on a dime, where there's a mass euphoria, where there's limited regulation in some of these markets, you should be able to learn from this. It boggles my mind to this day that there are people my age that still do not understand the concept of speculative bubbles. And they make stupid financial decisions. And they continue to make stupid financial decisions. A lot of these individuals cannot build wealth over the long term. You understand that building wealth just requires two things. It requires patience and discipline. Most people have neither. You're lucky to find people that have one of those attributes, let alone both. And that's why so many people struggle to build wealth. If you are young, if you are under the age of 30 and you are watching this particular YouTube channel right now, please understand that you have the greatest gift of all, especially if you are investing in index-based mutual funds, like a total stock market index fund or an S&P 500 index fund. You have something called the compounding power of time. The time value of money is on your side because you have X number of years to put money away and just let it compound and build wealth. Instead, a lot of you guys choose to do stupid things with your money, like graded video games, cryptocurrency, NFTs, gold, silver, other pop culture-based collectibles. You guys go into these markets with a speculator mindset and you wonder why you lose. Speculators tend to lose over the long term. Now, certain speculators, they can win over the short term. And if they're able to transfer those winnings into long-term traditional investments, they're going to do okay. You guys got to learn this. So we're going to go through this article. And please just keep all that I said in the back of your mind because it should be obvious that NFTs were not a good investment. I told you that when these things started selling for massive amounts of money. I have done videos on this, guys. So here we go. A group of investors is suing Sotheby's Holdings and others over a 2021 auction and promotion of Bored Ape Yacht Club non-fungible tokens following a collapse in prices for the celebrity-endorsed collectibles. The four named plaintiffs in the class action lawsuit allege that the auction house misleadingly promoted the NFTs and colluded with creator Yuga Labs to artificially inflate their prices. Gee, artificially inflating prices in unregulated markets? I would have never suspected that. This is why I tell you guys, regulation is not always a bad thing, guys. Some of you guys that grew up from the Reagan era on, you seem to look at regulation different than some of us older folks. Now, to be fair, I'm not that old. I was born in 1976. You can do the math. But a lot of you guys seem to be convinced with all the wonderful fake political information that's put out there that somehow regulation is bad. I can tell you right now, there's a lot of people that are coming to me for help that lost a ton of money in graded video games or cryptocurrency, or they got caught up with the FTX scandal or Celsius or any of those other exchanges that went under. And, we have deep conversations, and a lot of these individuals now admit to me, Sean, you were right. Regulation isn't that bad. I wish there was more regulation in this market. And I honestly think as we go along here and people continue to lose money or get hurt in a lot of these markets, eventually, I think at some point, some of these people are going to either get into politics, they're going to get law degrees, and they're hopefully going to change the system for the better. That doesn't mean there's not going to be any opportunities to profit in these markets. Guys, Wall Street's heavily regulated, and you can still make money in Wall Street. I don't understand why when we talk about cryptocurrency, gold, silver, collectibles, antiques, NFTs, why the term regulation is looked at from such a negative perspective. A lot of you guys got slapped in the face with a very, very big stale donut that was thrown at you from a lot of these grading companies, auction companies, high-profile collectors and investors that just serve their own interests. Some of you need to realize that regulation in these markets would actually help serve your interests if you truly do have a passion towards any of these markets. I'm telling you right now, if graded collectibles alone had a level of regulation, a lot of these markets would flourish. They wouldn't falter because now certain individuals that would be coming into these markets would at least be somewhat protected. That's why I give a lot of credit. I know you guys don't want to hear this, like the coin grading companies, like PCGS, NGC. They've learned over the years that in order to serve their best interests, they have to kind of self-regulate, self-police a lot of these markets. And they do a good job of doing it. And again, it creates more opportunity in those markets, not less. So let's go back to this article. Sotheby's is among 30 defendants named in the lawsuit, with celebrities like Justin Bieber and Paris Hilton also accused of promoting the NFT collection without disclosing their financial links to it. That's a big no-no, especially if this would be in the world of stock market, high-end finance, where that's really regulated. According to cryptocurrency market tracker CoinGecko, the colorful digital illustrations of apes can now be bought for as little as $52,445, whereas as recently as May 2022, the cheapest would have cost collectors a little over $400,000. So that's quite the drop. And I know, I hate to say this, a lot of you graded video game collectors can relate to this because your market crashed just as much as this particular market did. In September 2021, Sotheby's sold over 100 of the NFTs to a single buyer in an online auction for more than $24 million. beating the pre-sale estimate of $12 to $18 million. Can you imagine being that particular individual right now? This proves, guys, that people with money do not always make the smartest decisions. You guys got to understand that, because I know there's a lot of young people that seem to incorrectly idolize people with a lot of money. You must realize that there's a lot of idiots out there that just ended up being born into a family, or they ended up inheriting money, or they ended up just coming up with one simple invention, selling the company, and now they have a boatload of cash, and they don't always make the best decisions with that money. Never, ever idealize someone for what they have. Idealize people for their values and who they are here and here. Not what they have here, guys. It's never going to work out for you, okay? Please understand that if you learn one thing from me. The amended lawsuit, which was originally filed in December, without naming Sotheby's as a defendant, claims the sale was deceptive and that the auction house had been hired by blockchain company Yuga Labs to generate investors' interest and hype around the Bored Ape brand. Sound familiar? Some of you guys that collect video games, this should sound somewhat familiar. That's all I'm going to say. Sotheby's representations that the undisclosed buyer was a traditional collector had misleadingly created the impression that the market for Bored Ape Yacht Club NFTs had crossed over to a mainstream audience. The plaintiff's legal team added in a complaint filed in a federal court in California earlier this month. Now, I don't know how stupid you have to be to see something like this come on the market, be hyped the way that it was hyped, and then go, oh, it obviously has mainstream appeal. I mean, let's be realistic. One thing I will say, NFTs are so new, at least you can argue that with graded video games, there was some, and there still is, organic collectability in that market. With NFTs, we're talking about little unattractive drawings of stupid apes that literally should be no more than a JPEG file. But yet, here we are, people paying hundreds of thousands of dollars for these things. It's insane, and it blows my mind. In a statement emailed to CNN, the auction house said, the allegations in this suit are baseless, and Sotheby's is prepared to vigorously defend itself. Full disclosure here, guys. Look, I have nothing against Sotheby's. I have nothing against Christie's. I have nothing against heritage auctions. But if you research and learn how many times a lot of these auction companies sued, if you look at how many times they get sued, you're going to see a trend here. And it doesn't always paint a very positive light on their behalf. Now, sometimes are these lawsuits frivolous in nature? Yes, they are. Other times, I got to be honest here as an independent consultant in the antiques and collectibles trade, other times they are 100% valid. Okay, I want to make that very clear. A lot of these auction companies, I've talked about this before on this channel, there is a fine line between hype, marketing, and then crossing it over into market manipulation. And unfortunately, where we are today with a lack of regulation in these markets, hell, if you want to research something, just look at how many people serving in Congress and even in the Senate. Some of these individuals are educated in auction law. There's a lot of money to be made for a lot of these particular individuals, even people, our politicians, giving these particular companies a free pass by choosing not to regulate their business. I'm going to be 100% honest with that. Back to the article. Representatives for Paris Hilton, whom the lawsuit accuses of having feigned interest in the NFTs for financial gain, and Justin Bieber did not respond to CNN's requests for comment. A spokesperson for Yuga Labs, meanwhile, said via email, "We believe that these new allegations, like those in previous iteration of this opportunistic complaint, are completely without merit or factual basis." Well, what the hell do you expect them to say? Let's be honest. Of course they're going to deny it. They're not gonna cop to doing anything out of the ordinary here, because now they're going to be held financially liable. As a media and technology company, Yuga Labs has empowered strong communities of enthusiasts and entrepreneurs to innovate, connect, and build. Their creativity has fostered community-driven projects that have captured the imagination of people around the world. That's the story worth telling. The investors, a term that Yuga Labs spokesperson rejected, instead calling them alleged purchasers of our products, are seeking a jury trial and have requested more than $5 million in damages. Let me say that again, guys. A lot of you guys in these markets, you call yourself an investor and you consider yourself to be really savvy. You are aware. You see what this company did. You are supposed to, if you listen to all these celebrities, the auction houses, the hype, you were supposed to invest in these Bored Ape Yacht Club NFTs. But the company that created them, now they're saying, you know what? We don't believe that these individuals were investors. We should call them alleged purchasers of our products. So some of you guys, you get into this market, you have an investment mindset, you buy in, and the company that takes your money as an investment refuses to call you an investment. Instead, they call you an alleged purchaser of our product. Can you believe this? Market and free fall. NFTs are used to transform works of art and other digital collectibles into one-of-a-kind, verifiable assets that can be traded via blockchains. Prices soared in 2021, hint, easy money, with an NFT of Twitter founder Jack Dorsey's first ever tweet selling for $2.9 million. Bet that idiot feels like an idiot right now, doesn't he? A video clip of LeBron James making a slam dunk fetching over $200,000 and a Nyan Cat GIF, GIF, going for $600,000. The first virtual NFT artwork to sell at a major auction house every day's the first 5,000 days by digital artist Beeple fetched a record $69 million at Sotheby's rival Christie's. The Bored Ape Yacht Club, a collection of 10,000 NFTs hosted on the Ethereum blockchain, launched in April 2021. The images feature cartoon apes with computer-generated features and accessories such as gold fur, laser eyes, hip-hop clothes, a sushi chef headband, or a sailor hat. Spoiler alert, they're completely ugly. No one's going to care about them 10, 20 years from now. I'm sorry to tell you guys that. The lawsuit against the creator also names several other companies involved in promoting the NFTs, such as sportswear giant Adidas, claiming they conspired in a vast scheme to artificially inflate prices. No surprise there, but you guys, some of you, you don't want regulation. Crypto payments company MoonPay is meanwhile also accused of market manipulation. Jesus, where does this end? The lawsuit says that Yuga Labs used MoonPay to discreetly pay their celebrity cohorts and make interest in the NFTs appear to be organic rather than the result of a paid promotion. Well, I hate to say this, we allegedly have a great video game company that did the same thing. So, 6.5, half a dozen in the other, little market manipulation, little lack of regulation. And now guess what? Some of you guys are holding on to worthless assets, or almost worthless assets. Because, like I said before, even your $25,000 video game that dropped to $2,000 to $3,000, it still has some value to it, just not as much as you would hope. Going back to the article, the amended court filing also contains testimony from a confidential witness, supposedly a former compliance employee at MoonPay, claiming to have sent a memo warning MoonPay that it was potentially running afoul of securities laws, as celebrities were promoting the NFT products without disclosing their financial interests in them. Don't these people have lawyers? Like, seriously, you would think somebody like Paris Hilton, heaven forbid, the sex tape, which I did see, was actually pretty good, I will say that. But you would think that people like Paris Hilton and Justin Bieber would have a legal team that would review this and go, hey, if this goes belly up, you're going to be liable. You're going to get slapped in the face with a stale donut, and you're going to get served a lawsuit. Neither of those things are fun, unlike the sex tape. But with that being said, I don't understand how these individuals are in this predicament. Well, yes, I do. Stupidity and easy money. Let's be realistic. So, neither Adidas nor MoonPay responded to CNN's request for comment. The lawsuit comes as huge swaths of the digital asset space, which includes NFTs and the cryptocurrencies usually used to buy them, are going bust after a pandemic-driven boom. It is one of several cryptocurrency-related cases brought to court in recent months. Bored Ape Yacht Club was a major beneficiary of the celebrity hype that helped attract new consumers to crypto, an industry rife with manipulation and fraud, and one that U.S. regulators are now more closely scrutinizing in the wake of the collapse of crypto exchange FTX, which I personally know people that were affected by that. My heart goes out to you guys, but man, if you were close to me, man, did I try to warn you. I did my best, and some of you just did not listen. In March this year, the Securities and Exchange Commission charged 8 celebrities for not disclosing what they were paid to promote cryptocurrencies. Again, I do not understand. Don't these individuals have a legal team or like someone they can go to and say, hey, I'm being asked to endorse this. Can you look over this contract? Does this seem legit? I mean, even me, this is one reason why, if you guys haven't noticed, I don't take any paid promotions on this channel. I would really have to believe in the product, and I would literally have to go over the contract with a fine-tooth comb to put myself in that predicament. But you would think that people who make a shit ton of money, I'm talking people that are in like the top 1 to 5% of wealth in the entire US, you think that they would have a legal team to scrutinize these documents and understand, hey, if this goes belly up, you're going to get slapped in the face, not only with a stale donut, but also a lawsuit. So with that being said, I'm putting a link to this full article in the video description below. Let me know your thoughts. Let me know your comments in the comment section below. I'm curious what you guys think about this because I have been warning about this ever since I started this YouTube channel. Thanks for watching. Have a great night. And be very, very careful if you get involved in unregulated, speculative markets, guys, okay? It's usually not going to end well for you. It's going to end very well, though, for the people behind the scenes that are able to pull the strings and make you dance like a puppet. They're the people that are always going to win. It's always the auction companies, the grading companies, the exchanges, the people that created the cryptocurrency, the people that created the NFTs. They're the ones who always end up winning. Hopefully, this lawsuit turns the tide and people stop and think and go, hey, you know, if I manipulate this market, I'm going to end up getting sued. I'm going to end up losing everything. And that's what we need, guys. That's what we need. Thank you and good night.